to the Payroll Podcast with your host, Nick Day of JGA Recruitment, specialist payroll recruiters.
To a special edition of the Payroll Podcast. I'm delighted to be joined once again by Helen Hargreaves, Associate Director of Policy at the CFPB. It was only a couple of weeks ago that we met for the last podcast, so
it was indeed.
Delighted to be with you again, Helen. We are here for a special one-off podcast to talk about the latest budgets. As we know, Philip Hammond has brought it forward by 3 months, just before Halloween, to deliver the latest 2018 budget speech. In the last budget, before we exit the EU, the Chancellor Philip Hammond appeared to relish his delivery of the 2018 budget speech, so much so that he took over an hour to deliver it and even found some time for a little bit of toilet humour. It of course earned him the biggest groan of the entire budget statement, so I won't give you any more of those kind of jokes right now, but we all know that his task is not an easy one. We've got Brexit around the corner. Coming up with a budget just before or during some very complex Brexit negotiations must have been incredibly complex, but we are assured by Fiscal Phil, as he's called himself, that the future is very bright for Britain. Apparently this budget will pave the way for a brighter future. So what I'd like to find out today is the CIPP's view on that brighter future, on the budget. I thought we'd just kick off, if we may, Helen, with a couple of highlights that you've picked out from the 106-page budget document.
Yes. What's interesting is that there's a difference between what Theresa May said about austerity and what Philip Hammond said about austerity.
Sure.
According to Philip Hammond, austerity is coming to an end, but Theresa May only a couple of weeks ago said that austerity has ended. So it was always going to be interesting to see what Philip Hammond did and how he was going to start bringing that about.
Jeremy Corbyn jumped on that as well, of course.
Absolutely he did, yes. And what probably was one of the biggest surprises, really, was that the expected increase to the personal allowance and the higher rate thresholds that we'd been told were going to come in from April 2020 are now coming in next April. They're coming in a year early because the Office for Budget Responsibility has said that we're doing better than they thought that we would.
Well, that's a good start to the budget report.
Absolutely.
What were the changes made to national living wage and national minimum wage?
The national minimum wage and national living wage the rates are always recommended by the Low Pay Commission, and it's usual that the Chancellor will accept those recommendations. Not always. George Osborne, a couple of years ago, just before the general election, funnily enough, went higher than what the Low Pay Commission set for some of the recommended for some of those rates. But this time, Philip Hammond has accepted everything that the Low Pay Commission have suggested for national living wage and national minimum wage.
Fantastic.
And we are on target to meet the suggestions for 60% of median income by 2020. So,
were the CIPP involved in any of the consultations regarding minimum wages?
We work quite closely with the Low Pay Commission. They get in touch with us quite a lot, and we always survey our members, because it's never just as simple as saying, how much do people need to live?
Sure.
Because you've also got to look from the employer's side of how much can they afford to pay without it having a detrimental effect on the business.
It's already the biggest expense, isn't it, of
Absolutely.
most businesses?
And so the Low Pay Commission do take a very pragmatic line through that, because if they set the rates too high, potentially employers might have to lose some staff. So
Sure.
they've got to have that balancing act. And they do look at, has there been any effect on the number of young people who are employed, or the number of apprentices? They look to see, well, what has the increase to this rate, what effect has it had on businesses' behaviours? And our members play a big part in that. Their responses get fed into the Low Pay Commission.
Great. Well, if they've been involved, it's been really positive news for many of those living on national minimum wage, which is excellent news. You mentioned apprentices. There's been some changes as well to smaller firms that are taking on apprentices. Can you talk to us briefly about what those changes are?
It's very sort of in people's minds about the larger employers that pay the apprentice levy. They pay this money out, and the idea is if you've paid the money out, it goes into your digital account. You might as well make use of the money by taking an apprentice on. But for smaller employers, they don't pay the apprentice levy, and so they can't yet access training through the digital account. They will access apprenticeship training, and they get co-investment, so they will pay for 10% of the cost of the training that apprentice, and the government co-invests the remaining 90%.
That's the current model.
That's the current model, and the changes are now that small employers will only have to pay 5%.
Excellent.
There has been a delay in allowing small employers access to a digital account, and that delay hasn't changed as a result of yesterday, but that co-investment model will still go on anyway, so they still get
Well, I think that's really
funding.
positive as well for those that may have listened to my podcast with Ian Holloway, which was very much focused on the payroll apprenticeship scheme. For those that are interested in taking on a payroll apprentice, and this is now a more affordable thing to do for a small business. So
it is.
a really positive thing for the payroll industry there as well. Fantastic. Now we are going to go into a lot of this in more granular detail. So for those interested in what the new rates are going to be for the national living wage, national minimum wages, we'll have a look at those a little bit later into the podcast. One of the package or measures announced was to tackle tax avoidance, and there was obviously big headline news talking about universal credits.
Yeah.
Are you able to elaborate on a couple of those points briefly?
From a tax avoidance perspective, it's possibly one of the things that has irked payroll professionals and stakeholders is the link between off-payroll working, and it always seems to be lumped up with tax avoidance.
Okay.
And it's not really considered that at all, not from our world. But it was always going to come that for people who are working under the IR35 arrangements, a couple of years ago, the government said that if someone's going to do some work for a public body, then it would be for the public body to determine whether or not the tax and national insurance should be taken away from that contractor through pay as you earn or not. We always knew that those arrangements would in some way come across to the private sector, because you can't have one rule for one and one rule for the other. So that hasn't come as any surprise, really.
We could probably do a whole podcast on IR35 on its own.
We absolutely
so
could.
We'll watch that space, but we'll go into a little bit more detail on exactly what those changes are
Absolutely.
a little bit later in the podcast, which would be great. And the universal credits was the other headline-making piece of, or announcement rather, from the budget.
The universal credits, it's been across every news bulletin, hasn't it, over the past few weeks, and so the Chancellor did give some softening measures, shall we say. So he's increased the work allowance, and he's also put some money aside to help those who are transitioning, because that seems to be the biggest problem when you go from one style of benefits across to universal credits. There's always been that gap that's caused problems for the recipients.
So hopefully we're going to close that gap a little bit. I think I saw some of the headline figures of families being up to £200 a month worse off. So hopefully some of those changes will help to cut that gap.
Yeah.
Fantastic. Now for those that haven't seen the budget yet, or you're not up to speed, there was a great line in there which Phil Hammond himself said, Fiscal Phil says Fiscal Rules OK. We're not making that up, he really did say that. But there is a new path for public spending. There's lots of changes, there's lots of information that we're going to try and get through today. Obviously, 106-page budget report is never going to be that easy to run through. So we're going to try and make it as accessible and as digestible as possible. As you can expect with a budget announcement, the devil is in the detail, and that's why I'm sat here with Helen, who of course is Associate Director of CFPB Policy. I'm sure that her team will continue to bring you additional news over the coming days beyond this podcast. But I think if we can, let's crack on and have a look at a bit of the detail. I'd like to start, if we may, Helen, with the tax rates and thresholds. It's the first thing that comes to mind when you talk about payroll these days is tax. So I think it's probably the best place to start. Can you give us a little bit more information about the budget and how it relates to income tax, devolved income tax, company cars, vans and fuel, and sort of the headline pieces that are directly relevant to a payroll professional?
Absolutely. Things that we've already touched on, the personal allowance, which is the point at which people would start paying income tax, is going up to £12,500 from next April, which is a year earlier. And the higher rate threshold, so the point at which you start paying 40% tax, that's going up to £50,000 from next April as well. So that is reducing the amount of tax that quite a significant proportion of the population will pay. Apparently, so Mr. Hammond says a typical base rate taxpayer will pay £1,205 less in the tax year 2019-20 than they did back in 2010-11.
Fantastic. Well, that's a really good start. I think he said as well from April 2021, both the personal allowance and the higher rate tax would return to annual increases that are in line with the CPI inflation.
Absolutely, yeah. That's what he said. Given that, every year, just recently, we get told that one thing's going to happen, and then all of a sudden we get a little present. So you never know. Let's see what happens
Watch
with
this
that.
Space. We'll have to do another podcast next year and compare differences.
Yes, and if we look at devolved income tax, we've got some changes coming in for that as well. The Scottish Government, they've got the responsibility for setting their own rates and thresholds. Sure. So what we've talked about now, that applies for England and Northern Ireland. Scotland, they will be setting their own rates and thresholds in their budget, which is on the 12th of December.
Sure.
The Welsh Government, this coming year, is when they start to get responsibility for setting their own rates, but it works very much like it did for Scotland back in 2016. So the Welsh Government will look at the rates that have been set for the UK as a whole. They will take 10 pence off and then add on in its place, and that's for each specific rate.
Okay.
And then they'll take 10 pence off and then add on the amount that they think is appropriate. Very handily, they have said so far that they will add on 10 pence. Yes.
Excellent.
So that does make life much easier for payroll practitioners, knowing that at least they're going to be the same.
And confirmation for that's expected in December as well?
It is, yeah.
Fantastic.
From company cars, vans and fuels, it's business as usual for that, really. So the car fuel benefit charge and the van fuel benefit charge, they are going to increase in line with the RPI or the CPI.
Okay.
And the multiplier for the car fuel benefit is going up to 24,100.
That's an increase of £700.
It is indeed, yes.
And the flat rate van fuel benefit charge, I think that also increases?
Yeah, the flat rate van fuel benefit charge is increasing to £655, and the flat rate van benefit charge is increasing to £3,430. There's only one word different in those sentences, but the figures are significantly different.
They really are. But they can always rewind and re-listen again if you're not too sure.
Yeah.
Now, obviously, the benefit charges for zero-emission goods vehicles is also increasing.
Yep.
Obviously, it's a big thing in the government agenda at the moment anyway. What are the changes there?
So, for the zero-emission goods vehicles, the increase is going up from 40% to 60% of the standard charge from April 2019.
And that's the same as what was previously announced?
It is, yeah. That one hasn't changed. Yeah.
And for diesel supplements?
The diesel supplement for the company car tax, the appropriate percentage remains at 4%, subject to the maximum appropriate percentage of 37%. Cars that meet the Euro 6D standard, which is also known as the Real Driving Emissions Step 2, RDE2, they're exempt.
Okay, fantastic. There were a few documents published alongside the budget statement as well in relation to income tax and other allowances. I think for the 2019-20 tax year, there are some changes to the marriage allowance and married couples allowance, and even the blind person's allowance, I think.
They were.
Do you know what those amounts were?
Yes. The marriage allowance, and that is also known as the transferable tax allowance, that is going up to £1,250. The married couple's allowance is going up to a maximum of £8,915, and the blind person's allowance is increasing to £2,450.
Great. So overall, pretty positive for
Absolutely.
people that can benefit from those areas. Will that have any major effects for payroll again? Will most of that be programmed in?
No. All the allowances and everything always get programmed into. You get the codes across from the revenue, and then they just go into the software.
Fab, fantastic. Now, we touched upon apprentices. I didn't want to go into too much detail in the opening gambit, if you like, or the opening narrative of the podcast, because I think it's important we give it a little bit more attention here. You mentioned there were going to be some changes to the way that apprentice levy funds are transferred and the way that businesses make their contributions. Do you mind going into a little bit more detail about what that means for businesses and actually how it could really help small businesses?
Yes. Again, The apprentice levy has always focused on the larger employers because they're the ones that pay it.
Sure.
And we've now got to the stage, it's been in long enough, that now larger employers who've built up quite a big pot in their digital account, to the extent that they can't necessarily spend all the money that's in their pot.
Sure.
They can now start to transfer funds to other employers. Usually it would be employers that sort of like in the supply chain, or some, a type of employer that they might have some sort of relationship with. And so from April 2019, they'll now be able to transfer up to 25% of the funds to pay for apprenticeship training for other employers that are in that supply chain.
That's a real positive then for the small suppliers in the supply chain.
Absolutely it is, yeah. And they've got another move for the small employers that we mentioned earlier, is that co-investment where the small employers were having to pay 10% of the cost of that training.
Sure.
The government have now reduced that down to 5%, so meaning that the government will pay 95% of the cost of the training of apprentices.
So in theory, it should mean there's more opportunities for payroll apprentices in particular, because small businesses will be able to fund them more easily, more readily. But also it's good for the payroll apprentices because, of course, the national minimum wage and apprenticeship rates have gone up. And the apprentice rate is currently it's at £3.70. From April 2019, that's gone up by 5.4% to £3.90.
Exactly.
So good news all round for apprentices.
It is, yeah.
Fantastic. Now, obviously, with the number of new apprentices falling below the numbers that were probably hoped for when the apprenticeship levy was introduced, obviously these changes are welcome. What's the CIPP's policy take overall in terms of how the apprenticeship levy and scheme is working?
I think it's sort of widely accepted that there haven't been as many apprentices as the government would have hoped for when they brought in the apprentice levy. We know that the government is now going to have another consultation to consult with businesses about changes to the levy. How can we encourage the take-up of even more apprentices? Sure. Because back in the day, apprentices used to be the ones that polish the cars or sweep the floors or whatever. These days, an apprenticeship is a good quality, a good standard of training where they get a qualification at the end. It's got to go through a proper framework, and they really are, a good basis for people as they start out in their employment career.
Now, I know, basically from doing a podcast already on payroll apprenticeship schemes with Ian Holloway, that a lot of work has gone into having a really robust, solid and a reputable payroll apprenticeship scheme out there for payroll professionals, which is great. But often when something isn't taken up, it's usually down to either marketing, so people don't know it exists, or it's due to knowledge where people don't know how to get the best out of it, or they think it's too confusing, or don't know where to get started. Yeah. Which do you think is the bigger contributor, if you like, to the fact that they haven't quite got the numbers they were hoping for?
If there are any businesses out there who are looking at wanting to take on a payroll apprentice or any other kind of apprentice, if they go on to gov.uk/apply-apprenticeship, then that will bring up a list of all the organisations and the apprenticeship training that they are offering, so people can access it through that way.
Fantastic. I'll make sure there's a link in the episode notes, so anyone interested in the apprenticeship scheme, particularly with the new budget allowing you to offset more of the cost now down to 5% instead of 10%, it might be worth taking a look at. So I'll put the link to find an apprenticeship in the episode notes of the podcast. Brilliant. Now, I know following the consultations the CIP have had, which I think were held during the summer, which was on tax and administrative treatment of short-term business visitors.
Yes.
There have been some improvements made to the PAYE special arrangements.
Essentially, businesses with a site overseas might have a subsidiary overseas, or they might have a branch overseas. And that distinction made a huge difference to the way that any of their visitors from one of those sites to the UK was taxed.
Okay.
And so essentially what the government was looking to do was to extend the arrangements from those who were working in a subsidiary overseas, they were extending that to those who are working in a branch overseas. So the workday rule, so the number of days that they can be over here, has been increased from 30 days to 60 days.
Okay.
Which doesn't sound a lot until you think actually it's been doubled.
It's doubled, yeah.
So then that's, it is a significant increase. And the existing page reporting and payment deadlines, so you've got the 19th of April and the 22nd of April, they're going to be changed and extended out to the 31st of May, because it's always been difficult for employers to get all the information in on time. The tax year ends on the 5th of April, and trying to get everything in a fortnight.
Gives them a bit more time.
It gives them about 6 weeks.
Does it give them enough? Has it gone far enough in your view?
No.
Okay.
It never does though, does it?
There's so much data now. That's the problem.
Absolutely.
We're only getting more data driven.
Yes, and we are expecting a consultation on this.
Okay.
And when that comes out, then we will be lobbying again, because it's good that we've got some advancement, if you like, but they could really go a lot further to ease the admin burden that still exists.
So progress, but not quite enough yet. So it's good to see the CFPB will be at the forefront of that consultation to try and push that back a little bit further.
Yes.
So what are the effects of the budget going to be on national insurance contributions?
The usual changes. So we've got increases to the lower earnings limit, so that's going up to £118 from £116.
Yep.
So that's in line with what we would expect. The weekly primary and secondary thresholds, they're going up from £162 to £166. And then the upper earnings limit, the UEL, which happily happens to be the same as the UST and the AUST, they're all going up from £892 to £962.
Great, but NIC rates remain unchanged?
Yeah.
Fantastic. How about on the employment allowance?
Well, this was an interesting one, because the employment allowance, when it came in, it was originally £2,000, got increased to £3,000, and it applied to every employer regardless of size. And what the Chancellor has said is that really, for the larger employers, it was no real incentive. It was so small in comparison with their pay bill that it wasn't really going to encourage them to hire new staff, which was the original intention behind it. So it's now going to be restricted now to organisations with a national insurance bill of under £100,000 in the previous tax year. So really just bringing it down. The focus is on those who will benefit from it most.
Which is great. It sounds like this is one of the rabbit in the hats you perhaps weren't expecting then.
Absolutely, yes. He did say that bunnies had been escaping, but this was one that stayed in the hats.
Oh, well, there we go.
Yes.
Good news. And I know there were some changes to the National Insurance Contributions Bill.
The National Insurance Bill, the changes to Class 2, these were one of the ones where we had to have a U-turn when originally the Conservative Party manifesto said that there wouldn't be any changes, and then in his budget, Philip Hammond was going to abolish Class 2, and there was a furore about it, and so we had the U-turn. And it then got put into the draft National Insurance Bill, but it's not going to take place because everyone thinks that it would have an adverse impact on the lowest earning self-employed individuals.
So if anything was to change in the next budget next year, will the CFPB be involved in any consultations regarding this?
We wouldn't usually get involved in Class 2, because it has more of an effect on self-employed individuals. So if we get involved if there is any impact on payroll, this one doesn't specifically, but we do know that we're now looking to see details about how Class 1A national insurance is going to be brought on for termination payments. It's been lurking for such a long time. We're expecting it it was originally intended that it was going to come in for this current tax year, and it's not in software, so there's been a lot of debate. So now we want to see exactly where this one's going to go.
I think it'll be an interesting podcast to do in the future of all the things that are lurking under the surface that may or may not come out. I sense there's more than
Don't
more
look
than one
under the
item.
bed.
Yeah, absolutely. So we've touched upon the changes, the positive changes to national minimum wage and national living wage. We've got the exact amounts, how some of those will change. I mentioned the apprentice rate increasing from £3.70 as it is currently to £3.90. Can you give us a little bit more detail on some of the other changes?
Like I said before, it's very interesting that when the national living wage was first introduced, there was always with the intention that by April 2020 the national living wage would reach 60% of median earnings, and that seemed just forever away.
Sure.
And it seemed very unlikely that it would ever be achieved. But now, based on the estimates of how earnings are rising and everything, the Low Pay Commission thinks that we will reach that target. That they think that the 60% of median earnings will be £8.62 in 2020, and given that from next April we'll be at £8.21.
Sure.
Then it's quite close, and it looks like we will get to that. So from April 2019, as I've said, national living wage will be £8.21.
That's an increase from £7.83, so 4.9% increase.
Yes. For the 21 to 24-year-olds, they've got a 4.3% increase, so that's going up to £7.70.
That's from £7.38.
18 to 20-year-olds, they will be getting £6.15, which has gone up from £5.90.
That's a 4.2% increase.
16 and 17-year-olds will go up to £4.35.
And that's from £4.20, and that's the smallest increase of them all at 3.6%, but still noticeable difference if you're 16 to 17 years old.
Absolutely. And picking up on that point, if we look at the apprentices, they've actually, although they earn the lowest, they've got the highest increase.
Yeah.
So they're going up 20 pence from £3.70 to £3.90.
That's 5.4%. Great.
So we are expecting the Low Pay Commission report that's looked at all these different areas.
That's what underpins all the analysis.
Absolutely, it does. And they always look at the much wider picture, how employment trends of young people or
Sure.
apprentices, or if we've done this, has there been a knock-on effect? Even down to things like, well, if we've increased the national living wage, has it affected the number of benefits that you can pay to employees?
This is part of, a slightly bigger issue, or not issue, a bigger strategic element of how the role of the payroll professional is changing, because this is where you can use a lot of that statistical data to drive board level reporting.
Absolutely.
How many apprentices are we taking on, how many people do we have in each of these brackets, how are these changes going to affect the total cost of our payroll function?
Absolutely.
Should we be recruiting more at different levels?
Yeah.
Because our wage bill is going to go up by X or by Y, and really using that statistical reporting to drive changes at a strategic level, board level.
Absolutely.
There's more data now than ever, and now is a really good opportunity for payroll departments to grab their voice and use it. And you mentioned benefits there and how it can impact.
Yeah, the whole reward package, and payroll holds that data, as you said, to help influence the directions and the strategies that businesses take moving forward. And it's incredibly important. We really need to see that drive forward, really, with the realisation that payroll does hold the data that matters.
Sure. Great. Fantastic.
Einstein famously said that insanity was doing the same thing over and over again and expecting different results. We believe it's time to try a new approach to recruitment. JGA Recruitment specialise in recruiting the top 15% of payroll and HR talent using innovative 24/7 attraction strategies that are proven to improve quality of hire, candidate retention and return on investment. De-risk your recruitment process today and hire better talent faster with JGA Recruitment. Visit jgarecruitment.com to find out more.
Now, we mentioned at the start of this that IR35 could be a podcast in itself, but of course there have been some changes to off-payroll working in the private sector that Philip Hammond has discussed in the budget. Can you, I guess, without making it an hour-long podcast, it could be sort of summarise some of the things that he mentioned that are going to impact payroll functions and impact the IR35.
Yeah. Essentially, the IR35 legislation has been around for years and years and years and years, and individuals, contractors operate under a personal services contract, and they will then be contracted by an organisation to fulfil a certain amount of work. Under certain circumstances, the amount of control that the employer or the business that they're providing services to has over the way, how, where, when they undertake that work. To all intents and purposes, they could be an employee.
Yeah.
And the reason this makes a difference is because if they were an employee, they would pay tax and national insurance through payroll, and as a contractor, they would take care of their own tax and national insurance contributions. And so the government has, for a long time, had this under the microscope, and they're wanting to balance things up a little bit, saying, well, if people are doing the same work, they should pay the same tax and national insurance. So in April 2017, these contractors that were going to do work for public sector bodies, the contractors were no longer able to say whether they wanted to be treated as self-employed or not. It's down for the public sector body to go through a series of tests. There was a new tool that had been provided, and depending on the answers to the questions that this tool went through, determined whether or not for this particular element of work, the worker should have pay-as-you-earn and national insurance deducted from the amount that they've been paid. They weren't an employee, but purely for tax and national insurance purposes, it went through
closing
the
that tax avoidance gap.
Absolutely. And it was only a matter of time. We did say to people, just because you're private sector, you can't ignore this. It will come. And it did. And there's been a consultation that has looked at various options, recognising that the private sector is different in some ways. And anyway, yesterday, Philip Hammond has announced that yes, it is coming into the private sector, but they've learnt a little, and so instead of bringing the changes in next April, they will come in from April 2020, so that they can get time to do it properly, take the time, make sure that they explore everything properly, and that it will only come in for the largest businesses. So small businesses won't have to go through this process. The contractors will still carry on as they are now, and the government reckons that would be meaning that about 95% of businesses won't be affected, and they can carry on. The tool that is used to ask various questions and the answer comes out the other end, that is also going to be looked at and hopefully improved, so that it's a much more reliable indicator of whether they should go through the payroll or not.
Sure. Okay. Great. And what's the CRPP take on the changes? Positive? Is it a start? I mean, it's very rare you get any time to make changes, so the fact they're announcing it for 2020 is a nice thing for the government not to be throwing it on you with no word of warning whatsoever.
Absolutely. When it came out for the public sector, we were very, very critical, really, of the short time frame. Didn't help that it came in with other things as well, and everything. The guidance was very late, the specifications for software was very late, and it really was a difficult period. And we have been lobbying the revenue in stakeholder forums, but in private meetings as well, to say, you really, if you want something in and you want something to work, then let's make sure that we do it properly. Absolutely.
We don't have ministerial oversight, but maybe Philip Hammond is listening at the top and saying, okay, let's take a little bit more time.
Absolutely.
Measured approach.
It would be nice to think that, and we know, let's be honest, there are people within HMRC who feel the same, because if they've been working on something, then they want it to work properly as well.
Sure. So, following the budget, what are the changes or the points of reference we need to mention in relation to parental bereavement leave and pay?
We knew that this was going to come in. So from April 2020, Parents who have had a child under the age of 18 who's died will be able to take 2 weeks of parental bereavement leave. If there's been stillbirth after 24 weeks, then they will also be able to take this parental bereavement leave as well.
Which I think is a really positive,
Absolutely,
positive thing.
yes.
How about pensions and savings? There's obviously a lot to get through. We've got lifetime allowances, starting rates for savings, individual savings, child trust funds, and so on and so forth. Can you give us some of the key points?
Key points, the lifetime allowance for pension savings, that's going up to £1,055,000 for 2019-20. So that's an in line with CPI increase. Starting rate for savings, so that's the band of savings that's subject to 0%, will be kept at its current level of £5,000. And the individual savings account, the ISA annual subscription limit for 2019-20 will remain unchanged at £20,000.
Great. How about child trust funds?
Child trust funds, we're going to have a consultation on that in 2019. So we're going to be having a consultation on the draft regulations for maturing child trust fund accounts. The annual subscription limit for child trust funds for 1920 is going to be uprated in line with CPI to £4,368.
But there has been a change to premium bonds which you can give to a child, which I thought was quite interesting and a positive one. It's not just parents and grandparents can gift premium bonds.
Yes, and now I find this very interesting actually, because national savings and investments bonds, I mean,
it's quite old
something
school.
So traditional.
It is.
Exactly.
It's like they're trying to keep the candle alive, and they're making it because now anyone can.
Absolutely, yeah. So anyone, not just parents and grandparents, can give premium bonds to a child.
So over Christmas, people can start expecting a premium bond voucher
instead
of a gift or cash or book tokens.
Who would have thought that in 2018?
There you go, ready for present from Auntie.
Yes, and we're going to get a new app as well.
Yes.
So the idea is that, just as we've been saying, it's bringing premium bonds into the 21st century, I think.
I think it sounds like there's a lot of investment in digital and dashboards, and there's I was quite excited to read this one, which is on pension dashboards, which is something coming in, so you can actually see. Well, I'll let you explain.
Well, yes, you've got to read the wording very carefully, because there's been a call for a pension dashboard for a long time. With the government's move to encourage everybody to save for their pensions, everybody starting work, as long as they meet certain eligibility criteria, will be automatically enrolled into a pension anyway. But that could mean that by the time people are nearing retirement, they've got little pension pots all over the place, and trying to keep track of them could be an absolute nightmare. So there's been a call for a long time to have a pensions dashboard.
And people like to know what they've saved. They like to be able to log in and go, okay, this is what I've done.
Yes. Well, if you've got little pots here and there, they might feel insignificant. But when you can look on a dashboard and see everything all together, it gives you a much better picture. Now, what we know is that the government is supporting the launch of a pensions dashboard, but what they're wanting is they're wanting to see how an industry-led approach.
Okay.
So they're not going to bring it in themselves.
I see. This is where the devil's in the detail.
Yes.
It sounds good until you read the finer print. Okay.
But they're all behind.
They're supportive of it.
Yes.
Okay.
So what we have to get is the pensions industry working together to see if they can come up with something. And to be fair, I know that there is support amongst that, but you've got to get a lot of people together to make this happen.
Sure.
But DWP do support that.
Great. Now, you mentioned a little bit in relation to R35 that the government has been quite clear about it trying to close the gap on tax avoidance and evasion.
Yeah.
What were the highlights from the budget that you picked out on in relation to tax avoidance?
The tax avoidance is the one that hits the headlines, and it's the one where the head of the revenue ends up before the Public Accounts Committee or whatever. So we know that they do have to start really focusing down on it. So one of the measures that the Chancellor announced yesterday was to prevent abuse of the payable credit for research and development tax relief for small and medium enterprises. From the 1st of April 2020, the amount of payable R&D tax credit that a qualifying loss-making company can receive in any tax year is going to be restricted to 3 times the company's total pay-as-you-earn national insurance liability for that year. So what that's going to do is make sure that relief is robust against identified abuse, so including fraud and following the prevention by HMRC of fraudulent claims worth up to £300 million. So we're going to get a consultation on that, because this isn't going to be something that's straightforward, but that is R&D is crucial to a lot of industries, that will be important. We've got an issue about insolvency. So where tax is paid in good faith by employees and customers and then temporarily held in trust by businesses. So that can even be if your employer has taken off the pay-as-you-earn national insurance but hasn't yet paid it over. What the Chancellor has said is that those taxes will then go to fund public services rather than being distributed to other creditors. But it will only apply to taxes collected on behalf of other taxpayers. So it will only apply for VAT or pay-as-you-earn, employee national insurance, that kind of thing. Interestingly, won't apply for employers' national insurance, because that's not on behalf of anybody else. That is the employer's liability.
But presumably would include CIS, so construction industry scheme deductions as well.
Because they've been taken off to somebody else.
Great.
We have also focusing on insolvency. Directors and other persons who are involved in tax avoidance or evasion, that's even worse, or phoenixism, will be jointly and severally liable for the company tax liabilities where there's a risk that the company may deliberately enter insolvency to avoid paying.
Sure, that makes sense.
Absolutely, it does.
So, what about digital services, or DST? So I know that the government has introduced a new 2% tax on revenues of certain digital businesses, and these are the huge businesses out there, to ensure the amount of tax paid in the UK is reflective of the value they derive from UK users, which I think is quite interesting, seeing as Nick Clegg has recently been made Facebook's Global Affairs and Communications Chief. He's going to be someone who, presumably at Facebook, will be part of a business paying the additional 2%. Tell us a little bit more about...
Yes, I think so.
Digital services tax.
The digital services tax is only going to apply to the big boys.
Sure.
So, like Facebook,
Amazon,
Google. Exactly. Those businesses that have hit the headlines, they are always very keen to tell us that they have paid exactly what they are supposed to pay in that country, and they've stuck to the letter of the law.
Sure.
And I think perhaps that's where the issue lies. So the UK has been very keen that addressing this issue can't be done unilaterally. It has to be done on a global basis.
Sure.
But it feels a little bit like we've been knocking but nobody's been listening. So the government has decided, OK, then we're going to pave the way and we're going to start that ball rolling. So from April 2020, the government's going to introduce a new 2% tax on the revenues of certain digital businesses to make sure that the amount of tax that they do pay in the UK, it reflects the value of the income that they make here. Now, it's really important to say right from the off that we are looking at the big boys. So it only applies to those groups that generate global revenues in excess of £500 million a year. So they're very keen that the little start-up companies and the smaller businesses, that they're not wanting to address them.
And this is to come into effect in April 2020?
April 2020, yes. And I'm sure that behind the scenes, the government will then be seeing if they can extend it and get more countries across the world to join in, because, of course, that's the whole point, isn't it? That if they're taxed in one country, we don't want them to just go somewhere else.
Absolutely right.
Yeah.
And I think it makes sense. It's a sign at the end that the world is changing.
Absolutely,
So I think it's a positive change.
Yeah, so we're going to get a consultation on that as well, but that's definitely going to be an interesting one to watch, I think.
We've covered universal credits in the beginning part of the podcast. We know obviously they've been dominating news bulletins over the past few weeks. Is there any additional points you want to mention in relation to universal credits?
So as an industry, payroll has an interest in this really, because the information that we provide ultimately affects what someone receives in benefits later on down the line. But it's just, the principle is great, but somehow or other there just seems to be these overwhelming problems with how it's been adopted. So it's good that the work allowance is increasing for those people that need it most.
Sure.
We've got the transition into universal credit. What's going to be interesting now is to see how it works with the earnings fluctuating, and whether there are workers who are affected from that perspective as well. So it's one to keep an eye on.
So you'll be watching any changes closely over the coming months?
Absolutely.
Excellent. What are some of the other areas of interest within the budget that perhaps I haven't highlighted that you think is important to bring to the table?
One thing that was interesting in the budget yesterday was Brexit. It's sort of like the elephant in the room, really. Yeah. We all knew that, we don't know whether we're going to get the deal or the no deal.
It's the reason it was brought forward by 3 months as well, wasn't it?
Absolutely, yeah. So it actually, although we all knew that Brexit was the elephant in the room, it wasn't really referred to very often in the budget yesterday. But one area that it was mentioned was when we're talking about the VAT registration threshold, because there is this big cliff edge as to you're not registered for VAT, and then now there comes a certain point where you're registered for VAT, and then it has this significant impact. And so the government has been looking for a while now to see whether that cliff edge, as Philip Hammond referred to it, could be limited.
Sure.
But under EU law, the options are very limited. Actually, essentially what they're saying is there's not a lot we can do while we're part of the EU. So the VAT threshold, which is £85,000, is staying as it is until April 2022.
Okay.
And then at that point, the government's going to look at the possibility of having a smoothing mechanism. So
post-Brexit, assuming this all goes through.
Exactly.
I see.
Yes.
That makes sense. I know that some of the at-a-glance sort of headlines that I saw, and just to summarise some of the points you've mentioned today, I know that we talked about the income tax allowance rising to £12,500 from April 2019, which is a really positive change, and also a higher rate income tax threshold will be rising to £50,000 at the same time, so that's both coming a year earlier. We've talked about the national living wage increasing by 4.9%, so up to £8.21 an hour, also from April 19, and obviously the digital services tax, which is going to be introduced in April 2020, which is going to be an additional 2%. It's going to really target online giants, some of the names we've mentioned that are making more than $500 million a year. What are other areas of interest that you would like to highlight? I know that you picked up a couple of points pre-podcast when we were chatting about management capability and the way that the budget sort of backs entrepreneurs as well. Yeah, the budget was very heavily focused really on helping business, specifically helping small businesses. And so the Chancellor brought in or announced a range of measures. And so we've got different areas here for small business. Yes, we've got the management capability. So what they were looking at is that there was an industry strategy business productivity review, and the findings from that what they want to do is support management capability so that businesses can improve their productivity. Essentially, help businesses to improve things so that they can increase productivity. So there's going to be a small business leadership programme delivered in partnership with business schools, leading businesses across England. There'll be 2,000 places delivered in 2019-20, with the ambition of training 10,000 people by 2025. Could this have an impact on payroll leaders? Potentially so, yeah, because the payroll world is very much moving, and it more from just being an operational function into much more of a strategic role, really. And so that it's much more employee focused now as well. Absolutely. So this may be something that has a direct impact on the payroll, either future leaders or existing leaders. Absolutely. Potentially. Yeah. Which is good. And then we've also got an investment of up to £25 million to boost business productivity through knowledge transfer partnership scheme. So the plan is to put over 200 additional
graduates and academics with relevant skills into firms so that they can translate what they've done as an academic project or piece of work into practical business growth. And then there's also the intention to invest £20 million to support local peer-to-peer networks focused on business improvements so that business leaders can start to share expertise on leadership, business development, technology adoption. And
I'm a big fan of networking, so if they can invest and support that, it's a good thing. I still think payroll people could network more and use the huge amount of knowledge payroll professionals have to great effect if they all kind of all bring it together, whether that's through LinkedIn or through face-to-face consultations or meetings with the CFPB. But
absolutely,
that's really positive.
And if we carry on looking at the support for small businesses, the government is wanting to work in partnership with banks, professional services, technology companies to support the productivity of small business customers. So what they're wanting to do is improve the customer experience for businesses who are accessing online government information services. So essentially, all these big organisations link up together so that the small business gets, finds it much easier to get through.
Which is great, and hopefully all those things will help the UK to continue to grow, which there's a lot of uncertainty with Brexit coming up, and want it to grow and prosper and build a solid economy. So hopefully these things will play a part in contributing to that. Some of the other highlights that we've mentioned again through this, just to reiterate through the podcast that Helen's brought to light, is that the fuel duty will be frozen for what is going to be a 9th year in a row, which I was a little bit surprised about, if I'm honest. And for those that work in payroll, you'll be really pleased to hear that duty on beer, cider and spirits are going to be frozen for another year as well. Again, that was a bit of a shock to me, but we all know a lot of payroll people like their wine and probably need it working in payroll as you do. So we've talked about smaller firms' contribution to apprenticeship levies being cut from 10% to 5%, which is a really positive change, particularly for those interested in taking on payroll apprentices, and I will put a link in the episode notes as to where you can find a good apprenticeship training provider. One interesting piece of news I did see though, and this may affect businesses, I don't know, that if you're payrolling for them, is there's going to be a mandatory business rate relief for all toilets available for public use. Both publicly and privately owned, which I thought was quite interesting.
Yes, we were back to the toilet humour.
I think we've gone full circle. We've started there, we've pretty much finished there as well. So there were some other headline budget announcements which probably aren't so relevant for the payroll industry, and Helen's highlighted a couple of these in the CFPB budget report, which I think is going to be sent out to members. One of those is a new 26 to 30 rail card, which is going to be introduced by the end of 2018, which will offer 1/3 discount subject to a minimum £12 fare in the morning peak to around 4.4 million 26 to 30 year olds in England, Scotland and Wales. They're going to make it easier for people to claim compensation, so the budget confirmed a more streamlined process for compensating passengers affected by rail delays. And for those that still get a lot of nuisance phone calls, the government is going to try and tackle nuisance calls with national trading standards, which will receive further funding to extend their projects, providing telephone call blocking technology to vulnerable people. And last but not least, just to bring it back to pensions, although it's not directly relevant if you're processing them, I wasn't aware of this, but you mentioned there's going to be a slight change to the banning of pensions cold calling, Helen.
Following pensions freedoms, when people have been able to access the pensions pots, there's been a huge increase in the number of cold callers trying to get people to invest their hard-earned pension pot in some scam or other. So to help protect people from fraudsters, the government is about to publish a response to the consultation that came out earlier on in the year to make pension cold calling illegal.
Great. That's
excellent.
Can only be a positive thing, and probably couldn't come soon enough.
Yeah.
Fantastic. Well, I think that pretty much summarises the key points of the budget from yesterday's meeting. If you have any questions, obviously, please contact Helen.
Absolutely.
She is the go-to person at the CIPP for anything related to policy, and I'm sure she'll be happy to help with the requests. I'll put some links in the episode notes as to how you can go about contacting the policy team should you have any questions on the budget. And I do believe there is a summary of the budget 2018, which is going to be going out to your...
It's on our website.
It's already on your website.
And it went out in the news email this morning.
Fantastic. There you go. You heard it here first. So please do have a look at the website, or if you haven't received it by email, go to the website. I'll put a link in the episode notes where you can access it at your own leisure. Fabulous. Well, thanks so much for joining us for this special podcast.
Thank you for being with me as we talk through it.
That's fantastic. And the next episode of the Payroll Podcast will be out on That's next Sunday. So please stay tuned for that. And if you haven't already subscribed to the Payroll Podcast, please do so. If you can subscribe, share, like, review it if you can on any of the major sites, be it Apple Podcasts, Google Podcasts. Please do so. We need your support. It's a not-for-profit podcast, and hopefully that means we can keep generating some great content with some really good industry leaders like Helen, who I have by my side here. So please do support us. Please do like, share, review, and I'll be speaking to you all again in a couple of weeks.
Thank you, Nick.
You've been listening to the Payroll Podcast with Nick Day of JGA Recruitment, specialist payroll recruiters. If you would like to feature on a future podcast, please contact us. For a wealth of world-class payroll content, please visit us at jgarecruitment.com. See you next week.